All right, so here we are. So today what we've said we're going to cover is we're going to figure out how we can determine where we're going to exit when we've taken a position. You know, it's one thing to enter a position and then you know when you've gotten in, you're already thinking about where you're going to get out for profits. But then it's really nice to be able to figure all that out so that you don't start guessing, okay, the trend is going up, where am I going to get out of the market? You don't do any of that. So there is a strategy that we make use of that really helps us to figure all that out. So it's part of what we're going to cover in this session for today. So we're looking at perpetual contract right here. And you know, in the last session we talked about using 3 different time frames. And what is the reason why we're using 3 different time frames? It's because of time horizons. And we talked about using the 5 minutes, we talked about using 15 minutes, and then we talked about using the 1 hour. So those 3 different time frames are the time frames that we make use of. It helps us to really know what's going on in the overall market, giving us a nice advantage on where we're going to take positions. So now, when we've already taken a position, how can we figure out where we're going to exit when we're in profit? When I jump onto a higher time frame, what I'm actually looking for is I'm looking for previous areas where price reacted. That's previous areas where the price moved away from. And so what that means is where sellers are selling, the previous areas where price reacted, where the price moved away from. So just to give us an example of what we're talking about, if you look at this area here, price reacted here, it reacted here. So these are the previous areas where price reacted, and here too. Right now, what we're seeing for Ethereum is it's at $235. So if I was taking a long position right here and I'm trying to figure out where am I going to exit, where is it safe to exit to take profit so that I don't get left on the trade? Maybe I'm thinking, okay, should I exit here? What if the price goes beyond this point? What can help me to figure out where will be the nice point or the most likeliest point where it's best to exit? So what I simply do is to map out the different areas where the price reacted. I map these out. And the reason why I map out these multiple areas is because they become my sell points where I'm going to exit if I've taken a position. So looking at this chart here, where are the areas, the previous areas where price reacted, where it started to fall? So this is the 15 minutes right here. But if I were to use the 1 hour to try and figure all of that out, that's actually a higher time frame, higher than 15 minutes. So this helps me to look at the overall market on a higher time frame. So I'm not looking at just 15 minutes. I'm looking at previous areas where the price reacted. So in this case, what I simply do to map it out, so I don't get to guess where those points are, I simply go to trend line and I make use of the horizontal line right here. I use it to map out those areas. And the first area we are looking at is right here, 267, right here. And then another area is here. And then yet another is this point. And then another is right here. And if I really want to just go all the way to continue to map out these areas, I can also map this one out right here. Or difference isn't much. If I'm getting in on this trade and I'm getting out here, That means I'm getting in on a swing trade, getting in and getting out really quickly. So these are the strategy I use to map out where I'm going to exit. So if I'm taking a long position from here at this point right here, I'm looking at getting out somewhere here, 267. And you might wonder, why am I looking at getting in here and getting out here? Well, these are the areas where the sellers activated this point. So what happens in trading is, most traders, what they do is, once they're in a position going long, they take note of these points, these very points. They take note of them. I can also map out this one here, just for the sake of clarity, right here too. So what traders do is, they already know when it got to this point before it went down. So it's mostly a psychological thing for traders, that when they get in on a position, they likely want to get out because they're looking at where the price reacted. It reacted here at this point. It went up, it went down. So if this trend were going up, it's going to have some resistance here. So if I were taking a long position here, I'll be looking at getting out right here, and then here, and here again. It went up and it went down, and then this region here, and then this region here, and of course here. So all you simply need to do is to look at the previous areas where price reacted. You can just look at the left side of the trend, the left side, and figure all that out. It's really simple. Just look at the previous area where people started to sell and when it started to fall. So if you're taking a long position here, you're looking at selling here. And if you're taking a long position from here, looking at selling here. And same thing applies for all the different previous areas. So now that we've figured all that out, another question we might likely be thinking about right now is, how do I determine on my buying range? Since we've already figured out where you're going to exit, if you take a long position, how do you determine where it's best to buy? Well, there are many factors that you can consider to determine where you're going to take a position, at what point you're going to take a position. One of the factors that you need to keep in mind is the places where buyers previously activated. Places where buyers previously activated. So if you're looking at this particular trend right now, you can just see on the 1 hour it opened up with a green. So the buyers activated right here. So your buying range is determined by many factors, like I said, and where one is to think or look at where buyers previously activated. So if you were thinking on getting in on this particular trend right now, you can see on the 1 hour I did open with a green candlestick, but then what are you seeing here? Red. And that's basically, the price hasn't dropped really much, but what this simply shows is people are not buying really much. If you look at BitMEX, for example, right here on BitMEX, you can see the sell wall. It's really huge on recent trades. It's more than, when you're looking at it, it's really huge. And then when you go to CoinFarm, what you can see here with CoinFarm, let me just open up the ETH chart. So what you can see here on CoinFarm is the shorts, the bulls and the bears. They're trying to see who will get the better of the market. That's why you saw a green and then you saw a red. Shorts are actually taking advantage, but not with a very huge difference, just 50% on $1 million superiority, while for the longs, just 49.36%. So that simply means that the market is a bit shaky. It's going sideways. It's not going up. It's not going down. It's just where it is. And so if you were thinking of getting in here, you should be very cautious. You notice it went as far as 334 earlier, but now it's down to 333. So what this simply tells us is buyers have not activated right here, but there is a lot of selling going on in the market, and that's why we see the price. On CoinFarm, we see the shorts having advantage of the market. So it won't be really wise to take a long position at this point, but just for the sake of reference, I'm going to show you something else that really explains what I'm trying to say. So if you were thinking about or trying to figure out where you should get in, right now, if you wanted to trade, you should be thinking of shorting. You should be thinking of shorting because the market is doing both ways. But for me, what I would do at this point is I would rather wait for a confirmation of where the trend is going before I take a position. Right now, it's shaky, 333, 334, 333, 334. It's really not so clear what the direction of the trend is going. So I'd rather wait to confirm where the direction is going. But if we want to look at previous candlesticks and use that to determine where we should take a long position, one thing you simply do is think of where buyers previously activated. So right here, you notice what you're seeing here is a green candlestick. So buyers activated right here, right here. If you wanted to get in on this trade and maybe you wanted to take a long position, what you will simply wait for is wait for a confirmation of an uptrend. Say, for example, Ethereum goes up to from this price 234 to 240, 241, 242, and then at that point you should still be cautious because the price could still come down. However, when you see a green candlestick open up and it comes down below this price, or it comes down again to this same price, it goes up from this price to 240 and it comes down again, then that tells you that if Bitcoin does not drop more, if it doesn't dump, then that should be your buy range because that's where the buyers activated. That's just an example. But looking at here, this is the point where buyers activated. So if you were right here wanting to take a long position, this is the point where you should be looking at. Just wait for a confirmation of the market. You see green candlesticks opens up and another one opens up again after the previous candlestick. Then that tells you that you can quickly get in and get out. However, always keep in mind if you're taking a position, remember in our first session, one thing we talked about at first is whenever you're entering a trade or taking a position and you see that the market isn't really going up or down, the difference between going up and down is not really big, always be very cautious because what that tells you is the market is trading sideways, going up, going down. So you're not really sure if it's really going to go up or really going to go down. So if you wanted to take a position at that point, you should take a position, make profits, quickly get in and get out. So that will really protect you. And remember, since you're giving times 50, if the market goes up by 2%, you've made 100%. So that's actually good profits. And so if you're not greedy, you can get in and get out in a very safe way. Looking at other previous candlesticks, this is also the place where buyers activated. You can see some green candlesticks right here. This way buyers activated. So if this trend were to go up and come down, this range right here will be where buyers will activate. That is, if it goes up from here to 278, if it comes down again to this point, this will be the likely point where buyers will activate. And if it goes up to this point and comes down, this region will be where the buyers activate. Same thing applies for here. If it goes up from here to this point and comes down, this is where buyers will likely activate. So it's mostly a psychological thing for traders. They mostly get in when they're seeing a green candlestick, and that shows confirmation of where the trend is going. So if I should map out the buy points, it will make this thing really messy, but you can simply get the point. If you wanted to determine where you should get in, think of the places where buyers activated, where you have the green candlesticks. So that will help you to see that, okay, that's going to be the price range where you're looking at, where you're likely taking a position. But for here, right here, I'm not going to be taking any positions right here because there's no confirmation that the price is going up. And Bitcoin has been very bearish, so if you're taking long positions, you should be very cautious, because if Bitcoin goes down anymore, Ethereum will follow, because Ethereum normally follows the trend of Bitcoin. So that's that for the buy range. So always keep that in mind. Wait for a confirmation when you want to take a buy position. And another thing you keep in mind is look at the previous areas where buyers activated. So if from here, just to recap, that's what I'm saying is, if the trend goes up from here to this point, from here to this point, and it goes up again, and it comes down, this area, if you've not taken a position when all of that happened, and it goes up, it comes down, and you're wondering, should I get in? This is the place where buyers activated. So what you simply do if you wanted to take a position would be to enter at this point and then put your stop loss close, so that if Bitcoin mess up your technical analysis, then the stop loss is going to take you out of the trade and protect your balance. So that's that for determining where you can get out and where you should get in. Just determine the previous areas where sellers activated and where buyers activated. It will help you to get a perfect entry point and exit point. All right. Now, what we like to think of is, we did say in our previous sessions that you notice here you're seeing the 1 hour. So the 1 hour is where I base my confirmation on taking a position. That's exactly the reason why I switched it to 1 hour. Yeah. So if I'm trying to base my confirmation of where the market is going, I base it on the 1 hour. I base a lot of my entry points on the 1 hour. And then once I see that, okay, in the 1 hour, the trend is really strong, then I use the 15 minutes to get in and get out on quick trades. So just for you to get that clearly, my confirmation, there are two different things. Confirmation and entry points are not the same. So maybe you guys might get confused. Let me make it clear. The 1 hour is where I base my confirmation on taking a position. So if I want to take a position, I first of all confirm where the direction of the trend is going. It's different from entry point. The entry point is, what price am I buying? But the 1 hour is, where is the trend going? Is it going up or is it going down? So after I've used the 1 hour to figure out or confirm taking a position if the price is going up or down, I use the 15 minutes to base my entry point decisions. So if I were to get in on a trade right now, I just switch to the 15 minutes and look at what's going on at the moment in the 15 minutes. You notice the difference. It has multiple candlesticks here. Or if I switch to the 1 hour, yeah, just a few. And in the 15 minutes, you're seeing some reds here, red, red, red. But in the 15 minutes, you're seeing some greens at the front. So if I were to use this to say, okay, I'm seeing some green, and that shows the market is going up. You have to really watch out. This is the 15 minutes. You don't use the 15 minutes to base your confirmation of the trend. So what this is simply telling you is, in the last 15 minutes, there have been a lot of buying, but when you're looking at the bigger picture in the last 1 hour, there have been a lot of sales. So that tells you that even if the 15 minutes, it looks like the price is going up, well, the 1 hour, the higher time frame tells you it's not so safe to get in because the market is still bearish. So what this 1 hour has just helped me to do is to just figure out that it will be dangerous to get in right now, even if some candlesticks appear in the some green candlestick appears in the 15 minutes. So The 1 hour is where I base my confirmation on taking a position, and then I base a lot of my entry points on the 15 minutes. So another thing I do to make sure I look at what buyers and sellers are doing in real time is I look at BitMEX. You know, it's very important to do this because if you're not looking at what buyers and sellers are doing on real time, it might be difficult for you to really figure out, excuse me, what's going on in the market. So I make sure I do this, look at what buyers and sellers are doing in the market. I always make sure I do that, what they are doing in the market in real time. So why I do this is because if a lot of buyers are getting in, then the price is going to push up. But if a lot of sellers are selling, then the price is going to push down. So what I do to get this data is I look at 3 places really. I look at I look at BitMEX, I look at CoinMarketCap, and then I look at Binance. All right, so let me just start with BitMEX. So right here, what we are looking at is this. If I want to know what buyers and sellers are doing in real time, I just come here and look at the order book, and look at the recent trade, and look at the depth chart. So this is part of the strategy that I make use of. And I also look at CoinFarm. And once I'm looking at CoinFarm and I'm seeing right now the shorts are still superior, then that tells me a lot of people are still selling, but the margin isn't really great. That's why the price is not going up too much, it's not coming down too much. So this is what I just simply do. I come here and just manage or take a look at what buyers and sellers are doing. And from here, I can just basically see that the sales are still there, although you can see a green wall, like people are buying. But you should really be careful here. And the reason why you should really be careful is because if you're looking at what buyers and sellers are doing, for example, you see someone put in $1 million on a position on BitMEX, and you feel, wow, maybe you see that on the other book, and someone puts in $1 million and you feel, wow, that's a huge amount of funds they are trading on Ethereum, so the price is going to go up. You know, you should really be careful because it could be fake volume. What I mean by that is the person might just do that and cancel that order. And once he cancels it, then the price will still go down. So even if you see someone put in that amount of money, that doesn't mean the market is going to, or the price is going to go up. No, because it can be removed. So you have to take into account the overall buy orders and not just single buy orders. So if you're looking at multiple buy orders and you see that so many buy orders are there, then that's when you know the price will likely go up. So you're not just looking at just one buy order, someone placed $10 million, oh wow, so the price is going to go up. No, look at multiple buy orders or overall buy orders and not just single buy orders. And how you basically do that is by looking at the recent trades here. Look at the size of the recent trade, and then you get an idea of the overall strength of the market. So if you're looking at the recent trades and you're seeing buy, then that tells you that the trend is likely going to go up. However, you still don't decide because you're seeing the recent trades, there is a lot of buy here. No, you don't do that. And I'm going to come into that later. So just keep that in mind, that you look at the overall recent trades and use that, just size that up, and it gives you an idea if a lot of persons are buying, if the trend is really going to go up. So if you see a huge buy order and little sell orders, that tells you that prices will likely go up. When you're looking at BitMEX, you see huge buy orders and little sell orders, then that tells you the prices will likely go up. So the next thing I look at is I look at Binance. And the reason why I look at Binance, the reason why I actually look at BitMEX is because they have a very huge volume in the market. a very, very huge volume. So if something is happening here, it's going to affect the whole market. So another exchange I look at is Binance, because they really have a huge volume in the market. So I look at the 24-hour volume of Binance, and then I look at the 24-hour volume of ETH/BTC. And in order for the price to go up, you need price to go up in volume, or you need the volume to go up. So if you were waiting for price to go up, then the volume needs to go up. So if I'm trying to figure out, should I stay on a position, I just look at the volume. Is it going down? If the volume is going down, the 24-hour volume, then it's likely that the prices will go down. But if the volume, I'm looking at the 24-hour volume of Ethereum on Binance, it's going up. And then on BitMEX, the recent trade shows that people are buying, then the price will likely go up. So that will help me to know, okay, it's safe to take a position if the volume is going up, and there are a lot of buy positions on the recent trades on BitMEX. So what you just simply do, you just, as a shortcut, is just add ETH BTC to your favorites. And how you do that is go to BTC market. If I deselect this and go to favorite, you won't see anything there. So go to BTC market, and this right here, this star, select, and you're already seeing your Ethereum there. Just add that to your favorite, and you just read the 24-hour volume from there. So like I did say, if the volume is increasing, then the price will go up. But if the volume is decreasing, then the price will go down. So if I'm in a position, I want to make sure I see if there is enough volume coming in. If I'm in a position, if there's not the volume coming in, if it isn't much, then that tells me to be a wise thing to exit the market. CoinFarm is the website where I see BitMEX superiority, BitMEX margin, ETH. You can see here that the superiority of the shorts is dropping. It was 1 point something million dollars, and now it has gone to $837,000. So this is the place where you see the actions of the bulls and the bears. So once we see the superiority of the bulls right here, the bulls go long, blue here, and the bears go short, which is red here, as we're seeing. So if the bulls are superior, maybe by a very huge margin, like 55%, I'm looking at BitMEX. Recent trades is looking good. There are a lot of buy orders on the recent trade. I look at Binance, the volume is increasing. I look at CoinFarm, and I see that the longs are taking advantage of the market. What I like to see is, I like to see the superiority here that you're looking at when I want to take a long position. I just like to see it at 15 or 20 million dollars. If I see it that the longs are superior with a price range of around 15 to 20 million dollars, then it's very likely that we're going to go up. So we want to see the longs take over, and that gives us confirmation that the price is likely going to go up. So just keep this in mind. If you want to enter a position, or you're in a long position already, and you want to know, should I be getting out? Look at BitMEX, look at the recent trades. In the recent trade, you're seeing a lot of buy orders, and then you look at Binance, you see a lot of volume coming in, and then you look at CoinFarm, and you see the superiority of the longs is about 15 to 20 million dollars. Then that tells you that the price is likely going to go up. So if you were in a position at that point, it's safe to stay in the position. And of course, even if you're staying in a position and you make profit, keep in mind you should have a target, a strategy. So when you're in profit, it's safe to take your profit and don't be greedy, because if you do, what happens is, the momentum exhausts itself, and then the price starts coming down, and it might put you in a loss. So that's just the three ways I use to determine what direction the market is going. I look at the trades, the other books, compare it with the recent trades, and then I look at Binance, the 24-hour volume, and then I look at CoinFarm. Who's superior? Is it the bulls or is it the bears? Of course, it's really good to look at CoinMarketCap too, because if you're looking at the total market cap and you see it dropping, that simply tells you that even if for the volume of Ethereum it's going up, you should be careful, because if the total market cap is dropping, sooner or later it's going to affect the price of Bitcoin and every other coin in the market. So it's really nice to also look at the volume of the market cap to just get an overall idea of what direction the market is going. So that's basically how I figure out where I should be exiting the market. Just looking at the volume. If the volume is going up, then you can steal some more, but still have a strategy, still have a target. And once your target is hit, when I mean target, the price that you want to sell, once it gets to that target, take your profits and bag your profits in. So look at BitMEX, look at Binance, look at the volume, and look at CoinFarm to see who's superior in the market. So we've just a recap on what we've talked about so far. We've talked about determining where you should be getting in. We've talked about your exit points, and we used the previous areas where price activated. So if you wanted to get in, look at where buyers previously activated. Then if you wanted to short, you wanted to take profit, and you're trying to figure out where am I exiting, look at the previous areas where sellers activated. And there's one thing I would really like to mention about BitMEX. BitMEX, there is a lot of manipulation going on in BitMEX, so that's basically why I mostly make use of Deribit. And for BitMEX, sometimes they still have some lagging issues where it becomes, a bit difficult to really see what's going on in the overall market. So Deribit is pretty nice. Part of the strategy, let me just mention this real quickly before we end the session. Part of the strategy that I make use of is I make use of two screens. So you may want to keep this in mind, making use of two screens when you're trading. One screen, you should have Deribit there, and the other is TradingView. And the reason is you don't want to be jumping on TradingView, then on BitMEX. You should be seeing all of this data in real time. So always make sure you make use of two screens, TradingView and then Deribit. So just keep that in mind. And remember too, we did say on TradingView, this is just one screen here. Whenever you're trading, you should always have three screens on TradingView. So you have the one for 15 minutes, 5 minutes, and the 1 hour. So that's just about our session for today. If some of you have any questions, feel free to drop it on my WhatsApp, or drop it on Facebook, or you can even call me or send a text. So we're going to end the session here today. Like I did say, if you have any question, just feel free to ask me, and I'll be really happy to answer your questions. So here's where we're coming to the end of our session today. Thank you all for joining. Do have a nice evening. Bye-bye for now.